Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Nick Ducoff, Head of Institutional Growth at Solana Foundation, David Rutter, CEO of R3, and Robert Leshner, CEO of Superstate. We're here to discuss the tokenization of real-world assets on Solana and democratizing access to finance. It is great to have all of you with us. Welcome to Trade Talks. Before we get into the conversation, Nick, let's kick it off with you. Give us a reminder of Solana's foundation role within the digital asset space.
Absolutely. So it's Solana season. Solana has an incredible year so far. Over $2.5 trillion in trading volume year to date on Solana. Folks including BlackRock, Wellington, Societe Generale, Franklin Templeton, all have tokenized on Solana, including Galaxy recently tokenized their equity on Solana just this past week. So we're very excited to welcome them to the Solana ecosystem as well.
Yeah, and David, R3.
Yeah, R3's been around for 10 years. We've got about 17 billion of real-world assets tokenized. But for those that know the history of the company, we were backed by a group of banks, and we've really focused on a private permission solution until now. And we've partnered up with Solana. We're super excited about it. And part of what we're going to talk about today is the democratization of finance. And we're aiming to bring the next $1 trillion of real-world assets onto Solana, and we have a plan to do that.
Yeah, and Robert, Superstate, no stranger to the show.
No stranger, happy to be here.
Thank you.
So at Superstate, what we're doing is we are helping public companies bring their stock onto Solana. And we do this by partnering with them as their transfer agent. And so the shares that we bring onto Solana are the official shares of a company, as opposed to a third-party derivative or wrapper that someone just makes up. So when you see a tokenized asset on Solana that comes from Superstate, you know that it's the company's actual stock, and that's going to enable public companies to do really exciting things coming very soon.
Yeah, and it's interesting, Nick, the momentum with institutional adoption really has taken off this year. To, with the framework being put into place, not only are you seeing the talent come back to the U.S., but the funding rounds, companies going public, leveraging Solana. It's certainly the year for Solana as well. What do you think is really driving that this year?
Yeah, so the Trump administration has done a lot to bring that innovation back stateside. We were just talking, Robert doesn't leave New York, and now he can do much more here without having to travel all over the world. It's been a great year. You have the Genius Act being passed, which has unlocked just an incredible amount of innovation, especially from large financial institutions who now are given express permission to build on public blockchains like Solana. And then, of course, you look at public markets, and it's been a great year. Circle, Figure, Gemini, Galaxy have all had great public offerings, and there's so much more to come.
Yeah, and certainly with being able to democratize access for investors, whether institutional or retail, I think that's a big part of the story as well, as we're seeing these opportunities starting to be deployed.
Yeah, I think, Nick just talked about the regulatory environment and some of the exciting things going on as it pertains to new issues and all that are backing the Solana ecosystem. But really, it's a confluence of a lot of different things. One is Solana, like a lot of public chains, has grown up. The system is very dependable, very fast. You can now get settlement finality in under a second, in about 250 milliseconds. And the fees are very reasonable. The other thing we love about the Solana ecosystem, and I really didn't think R3 was necessarily going to end up there, is that it's a single ecosystem. Our traditional finance companies, large banks and the like, have a really tough time linking on to any new venue. So with Solana, we can get everybody at one go. If you look at the Ethereum ecosystem, it's a hodgepodge of layer 2s and side chains and everything else. So we're super excited to be connected with Solana, and can't wait to see what we can do in the next year.
Yeah, I think, Robert, part of it is too, adding on to why Solana is well suited for institutional growth. The goal is to not be so proliferated as it is with traditional banking systems. Like, why make it tougher when you don't have to?
Yeah, exactly. I mean, when you're talking to issuers, they just want a system that works, right? They're not looking to experiment in too many different ways. Tokenizing their stock as a public company is a major experiment as it is. And so just knowing that there's a system that, has very high uptime and has a lot of throughput. I believe the current stat is that there's enough throughput to settle all stock transactions in the US. That's enough for a company to feel confident from a technology underlying how the token is issued.
Yeah, and we're hearing about the growth, Nick, in tokenization of real-world assets. This is accessible for investors now.
Absolutely. So in the past 15 months, Solana has gone from about roughly zero in RWA TVL to over $500 million. And that is buttressed by stablecoin growth, which year to date has gone from 5 billion to 13 billion. And investors can access global equities and all sorts of assets on Solana 24/7 with near atomic settlement from anywhere in the world. And I think that's the real kind of value add of Solana, is that it's a unified liquidity venue for all assets trading on the blockchain, and more assets are coming every single day.
Yeah, and of course it's about user experience at the end of the day. You want that to be seamless.
Yeah, and for especially for the young folks today, you know, that want to have everything in the palm of their hand. They don't want to be restricted by trading hours and the way we've done things in the past. As someone that's been around Wall Street for decades, you know, there's some extreme advantages to being digitizing these various asset classes. And as both gentlemen mentioned, there's a ton of new opportunities coming on. You're going to see commodities on there. Equities, everyone can wrap their head around.
Right.
The tokenized equity makes a lot of sense. Why does it have to be difficult to trade? Why can't I trade it on a Saturday? So I think that the biggest change is the regulatory tailwinds have helped focus people's minds, but the advantages of digitization is clear to all now, and we no longer have to educate why, we have to educate how, and that's what we're doing.
Yeah. What about going public on chain? Do you think you'll start to see an uptick there?
Well, absolutely. So what we're doing at Superstate, we're starting with helping companies that are already public, like Galaxy Digital, tokenize their existing shares. Eventually, as more and more companies come onto the blockchain, you're going to start to see them raising capital. You're going to start to see them interacting more directly with the investors that are native to that ecosystem, and you're going to see new use cases. You know, we're starting with bringing public companies on chain. Next, we're going to help them do new things, and you're going to see that in DeFi. You're going to see it in borrowing, lending, trading, capital formation. You're going to start to see lots of different things. Will it compete with the Nasdaq for IPOs? Probably not at first. You know, but eventually, you're going to start to see more the center of gravity shifting towards on-chain capital formation.
Oh, why can't it be both? I mean, essentially,
It will be, of course, yeah.
Doing.
Yeah, you'll see issuers raising capital, you know, in traditional markets. You'll see them raising capital in crypto-native markets. You'll see them doing both at the same time. You'll see everything. There's going to be a lot of experiments over the next decade, and I think what people are going to find is that blockchains are an incredible place for trading and capital formation. You know, there's all of the advantages, and I think that's why there's so much of a tailwind from regulators, is that they see that blockchains are really good at this. They're radically transparent, they're extremely fair and fast, and you know, it opens up participation in capital markets to a much larger audience. And so I definitely think you're going to see both. You know, 100 years from now, I think it's all going to be on chain.
Yeah, well, it can serve multiple purposes as well. Nick.
Yeah, absolutely, and there's already a number of private pre-IPO stocks on the Solana network. Republic is tokenizing, Stripe, SpaceX, Anduril, many of the very hot pre-IPO stocks that one day will trade on Nasdaq. And then if you go even further upstream of that, you've got companies doing fair launches of their tokens on Echo and other fundraising platforms on Solana. So I think we're going to see the full life cycle from inception of a company all the way through to publicly traded companies on Nasdaq trading on Solana.
See, and I think that goes back to the democratization story. Why can't investors get access to private companies and get in, you know, closer to the beginning than having to wait until you go public? I mean, look how much wealth has been generated by the opportunity that private investors have.
Well, first we have to update the securities laws to make it a lot more, you know, open to all investors. But there's, you know, that's something that I think the public wants to see. That's something that I think regulators want to see, and I think it's coming.
Yeah, but that also goes back to the point that you made around education. These types of assets are very different than traditional equities, as an example. The liquidity profiles are different. When they're wrapped up into funds, that doesn't necessarily mean you can get your money in and out. So to your point, you know, regulators do have to catch up, and there is a lot of investor education that needs to take place as well.
Absolutely.
Yeah. Yeah, so.
Joe, if I could just add, I mean,
course.
you can trade private stocks now, but it's just not easy. There's some good companies out there that provide it. We do it. I do it personally. But I think that's an area that's really exciting. Obviously, the disclosure requirements and all that have to become clear, but allowing these promising companies access to capital earlier on through the tokenization makes a ton of sense for everyone. Now, there's still stuff that's in the operating agreement and all ROFOs and all they're going to have to work out, but that can all be built into a smart contract. So I think the future is bright. I'm going to disagree with Robert on one thing he said, though. He said in 100 years there will be no difference between TradFi and DeFi. And as the, I guess, elder statesman here, even though things move very slowly, I think the last 10 years has made it clear that's going to happen a lot more quickly than you're projecting. I think
I was just trying to put a conservative.
Yeah, no one can argue it. No one can argue with 100 years, but I'll go on and say within 10.
Well, Solana didn't even hardly exist 5 years ago, and now there's 80 million monthly active users, trading assets 24/7 on the network. And I think, we'll get to 8 billion certainly before 100 years.
Yeah, well, I mean, the thing is,
Well, it depends what happens to the birth rate. That could be a limitation.
So, but when you think about the investment cases and understanding the utility, it's not just about Bitcoin anymore. I mean, you're seeing it in indexes that have, multiple assets underneath them, where it's starting to broaden out, and I think that is quite encouraging, for sure.
Absolutely. I mean, we all owe Satoshi Nakamoto a huge debt of gratitude. If not for the Bitcoin white paper, none of us would be here talking to you today. But the blockchain has evolved, and high-performance networks like Solana enable high-frequency trading, like what is possible on public exchanges. And I think that's why you're seeing that trading activity come to Solana.
Yeah. So what's next? I mean, where do you see this in 3 to 5 years as an example, or what's next for Solana specifically?
Yeah, so a few technical improvements are being made. One is called Fire Dancer, which will increase the throughput of the network, make it even more scalable than it is today. Another is Alpenglow, which will reduce settlement finality from 400 milliseconds, as David mentioned, to about 150 milliseconds, so even faster. And I think that's really what people want today in the age of the internet, is immediacy, very, very fast, very, very cheap, very, very scalable, very reliable, and all those things is what Solana is.
Yeah. Tell us more about R3 Labs, because that's relatively
Yeah, so we've only set up R3 Labs in the last 6 months, and that's after coming to an agreement with the Solana Foundation to bring real-world assets to the Solana. We really admire a number of the companies, Superstate and others, that have really blazed a trail. Given our experience in real-world assets, we're trying to take a fresh look at how we can make it easier for our customers, which are the largest banks and CSDs and exchanges in the world, to bring those assets into the DeFi space. And there's still some challenges around privacy and how you deal with that. We think we've come up with a good angle there. Also, AML KYC concerns are going to continue to exist and need to be addressed in a regulatory environment that is consistent across DeFi and TradFi.
Right. Well, of course, I mean, TradFi, you can't avoid it. It's one of the most heavily regulated industry, financial services. It's something that you can't get around.
No, you can't. I mean, the reality is that, on-chain tokenized assets exist in the US markets that have regulators which are, really providing great leadership on this, but they don't exist in a vacuum. This isn't an entirely net new, place to create assets. It's a part of the broader US markets, and it's becoming an important part of the US markets, and it's becoming integrated and it's becoming effective, but it's a part of a much larger financial system.
Yeah, which will be interesting. I'm sorry.
I know, I'd say, and global, right?
Yeah.
It's not just innovators with regulation here in the United States, but we've got folks in Hong Kong with HKMA, in Singapore with MAS, in the Middle East with ADGM and VARA, and including Kazakhstan, which has really leaned in to Solana as well.
Yeah, it'll be interesting to see how the global regulatory environment evolves, particularly around privacy, right? And that's not just specific to the digital asset space. I mean, you can make that argument, AI and any product that touches different regions.
Well, I think the market will pick the best solutions. I think
Right.
there's going to be a lot of different ideas played out. I think there's going to be a lot of competition. I think there's going to be some things that are radically transparent. I think there's going to be some things that have, the frameworks that a lot of market, traders are used to today. And I think we'll see things in the middle. And I think everyone's going to battle it out with new technology.
Yeah.
I'm hoping, I mean, the regulatory environment is very fragmented in traditional assets. I hope that we find a common ground as it pertains to digital assets. One thing, just kind of recognizing that the regulators have a tough job, okay? Part of the limitations and the irritation of trading in equity, let's keep it simple, is I had to set up an account and they had to do AML, KYC me. I had to be 18. There were all sorts of frictions that allowed the regulators to apply regulations to make sure that your 8-year-old daughter isn't throwing around a couple hundred shares of Galaxy or something. So when you move on to mobile and always available and digital, it's a bigger challenge for them to think about it from a consumer protection perspective. So they have the work cut out for them.
Yeah, especially when it's fragmented, to your point, where you have multiple federal agencies and you have state.
The U.S. is the worst in that regard, by the way. I didn't mean to interrupt you.
Yeah.
It's just so
It's
insanely
there's
fragmented.
So much overlap.
Yeah.
As well, because then you bring in state regulators as well, then insurance, then banking.
And bank regulators and
Right.
We are seeing joint action though. The CFTC and SEC recently announced a statement, that was very pro-tokenization. Yes. Obviously, last week in Los Angeles, I was at the All-In Summit, joined by the CEO of Nasdaq, who talked about Nasdaq's plans for tokenization. So there's no doubt that I think there is an increasingly consistent point of view here, at least domestically, that tokenization is the future, and I think that tokenization will happen on Solana.
It'll be interesting if it's more of a unified framework and that can be applied elsewhere as we think about the evolution of cybersecurity law and AI and so forth. I mean, this could potentially be the model for it because we really haven't had anything new in the financial services space, or it's been incredibly restrictive.
I think the blockchain is bigger than AI for financial markets. That's my opinion, because it truly does democratize access globally to assets around the world, and that will ultimately deepen liquidity and enable more efficient trading.
Yeah, but I meant it from the perspective of if we could see more unified regulation using digital assets as a model, perhaps we could apply that to other types of technologies as well. And moving the world and technology is evolving quicker than I think anyone had anticipated. Look what's just in the past, 3 to 4 years.
Well, the advantage that AI or new technologies have is that they're growing up in an era where there's zero AI laws, zero AI regulations, whereas everything happening in crypto, especially as it comes to securities and tokenization, is coming into an ecosystem that's had 100 years of regulation and laws. And this is the problem that we had during the Gensler SEC, which is no one knows how to bring these two together. And I think we're finally at the point where society as a whole is figuring it out very fast, how they coexist. But I do think advantage to AI in that they can start with a completely clean slate.
Yeah, well, it'll be interesting to see how it evolves, and perhaps digital assets could be a model for that. But we definitely are at an inflection point as it relates to the technology and I think the regulatory landscape as well. All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.